Hello, my name's John Seguin, and that's me you see looking down on the trading floor at the Board of Trade. I spent 20 years down there, and back in 2002, went out on my own, and I continued to serve clients, writing daily newsletters for many commodities. I also developed a unique charting program that I'll introduce to you in the class. It's called Macrograph. What I want to do here today is just show you a little bit about what's going to be in the Vertex training series. So let's get right into it. When I was on the floor, I dealt with many clients all over the world, and often while I was on the phone, sometimes with two customers, I would have to answer questions they asked on a daily, even hourly basis for that matter. And so I developed this acronym, Vertex, that pretty much covers all the questions that I would get asked on a regular basis while on the trading floor. Value. Traders would want to know where most of the trading was occurring, where do buyers and sellers come together most often, what was the high volume price. And the reason why that was important, well, if you know what fair value is, you can read what momentum is, because momentum is simply the movement away from high volume price. So who's controlling momentum? Were the big firms better buyers today, or better sellers, or in the last hour? So that's important information. They're the ones that move the market directionally, so it's really important for us to understand who is controlling the momentum. Now that we're not on the trading floor anymore, it's tough to see that on a chart. But in the class, I'll show you how to discover momentum, or where the long-term players are, by using some of the methods that I've discovered. We'll learn to define risk in any time frame, day, week, month, quarter, whatever. Timing. Was a market ready to trend, or should we implement a mean reversion type strategy, or we're counter trading for days or even weeks at that sometimes? Where do I get in and where do I get out? Support and resistance levels. What do they look like? And we're also going to learn how to project profit and protect your profit once you get in a trade. One of the tools I'm going to teach you how to use is called Market Profile. There's an awful lot that a daily profile can give us, a lot of information, and I think it best depicts what's going on in the actual auction process and allows us to extrapolate any data, information, and actually give us 3 reads on momentum on a given day. You don't have to really have market profile capabilities. I'll show you how to use bar charts. I don't even use market profile anymore. I developed a system to organize data by day, so I can get a good idea of who's controlling momentum, what risk is going to be, where support and resistance levels are, and such. So we're going to talk about value in all time frames. Energy is simply the movement away from high volume prices. Risk. Before I get into risk, I should tell you that there are certain patterns that repeat often enough. I'll show you how to recognize when we have directional patterns. Neutral profiles, which tend to occur when a market's about to end a trend. We'll talk about breakout profiles, which we usually see at the beginning of trends. So using the short-term tool, you're going to learn to define value, define risk, determine momentum, assume direction, and pinpoint support resistance levels. While I was on the floor, I did a lot of these daily profiles by hand, but over time I started to notice that some of the same patterns that repeated by day, or some of the logic that I learned using the daily profiles, that if I applied that same logic to a longer term profile, that proven logic should work the same. Same rules for short term, we're just going to apply them to a longer term look, that's all. So instead of using letters in the daily profiles, what I've done is I've simply just used colors to distinguish days in a week now. So I call these barbells, which are really bells that have, bar charts that have bell curves in them. And they help me distinguish days in a week, and often there's plenty of time when I have no idea, no real solid read on momentum. But if I stack these profiles on top of each other, you can see in this second profile here, that I really couldn't tell you much about momentum given this chart here, these daily profiles in Kellogg, but if I stack them on top of each other, I have a good idea what the fair price is, and the fact that the market settled above that tells me that buyers have a slight edge. Simple logic. Value areas, we're going to use those. They're instrumental in defining risk. Macro graph shows it has a tool that will just put these staple looking brackets up here, and those are our value areas. We're going to use those to help us define risk. I'll show you how to use that. As far as energy and momentum is, like I said before, is simply the movement away from high volume prices. So if we can look at high volume prices by day, week, month, quarter, year, or whatever time frame you choose, at least we're going to have an idea of what's fair. And as the market moves away from there, we're going to learn to use these short-term signals that I teach you to help you with our next, to help us read momentum, and also with timing. When is the market ready to go? As I said before, value areas, you can see here these brackets in a down market. We're going to use the top of value to define risk, and in the rising market, the bottom of value defines our risk. And if you notice, this also, as we're locking in profits, if we move our stops to follow with those value areas. I'll show you how to do that. There's another term that I like to use called sprints, and that's simply single prints put together. And these sprints, like here, the sprints are very, very low volume areas. You can see when you come back to visit those, they tend to be very good support or resistance. You tend to see a lot of those before markets trend as well. I'll show you how to recognize those. As far as timing goes, I like to look at two dimensions. I think there's a dimension that is sorely missed in analysis, and that is time at price. And down here at the bottom of each chart, I have a measurement of the average length minus or high minus low to give us an idea of what's an average move vertically, but also we're going to be watching the dimension of time at price, or these, where the market, how much time does the market spend at price before it's ripe and ready to run again. So I'll show you how to use that in your analysis. This time dimension can be really helpful to tell you when the trend is about to begin. And these short, fat bell curves like this here, where I have a very noticeable high volume price, or even down here, they can tell you a lot. Even though the market's in a very choppy phase, what it's doing is prepping you for something much bigger that's about to occur. Just simply the laws of probabilities. If it gets wound too tight, it's ripe to run. When it's run too far vertically, overbought, oversold, we're going to look for this counter trade or maybe sell volatility type strategies. There's a lot you can learn from this. I think macrograph is a very robust technical tool because it allows us to look at overbought and oversold signals. When a market's wound too tight, just those two alone, and where fair value is, those elements alone can make you a better trader if you concentrate on those. As far as here's another, just a really solid example of a stock that got wound up a little bit too tight. That's far above average move or time at price right before the market breaks free and goes on a nice run. Entry and exit points, we'll just go through these in the chart real time. I mean, the only way you're going to learn them is by seeing them with your own eyes, and we will certainly go through that with a number of different commodities and stocks, just to prove how often high volume prices and very low volume prices, even value areas, give you great entry and exit levels, support and resistance levels. Just a good example of it here in the crude oil chart, where the low was made off a high volume price from a month, and then the high the next month, and then the low the next month. It happens too often to not pay attention to it. And I mentioned before that these sprints or single prints, they tend to give you support or resistance. We'll learn to recognize those. I think it's important to be, if you're going to be trading any market that you trade, that you understand everything there is to know about that market. What is its potential? What are its characteristics, its traits? What does it move in the first hour on the day, or the highest volume period of the day? What's an average weekly range, both vertically and horizontally, or monthly and quarterly, and so on? We're really going to be in tune with the market we have and in a number of different time frames, because that's going to help us do our profit projections and give us an idea of how far do I think this market's going to run, or what is the potential. We really, really need to understand this. Treat this like you're a detective, and you need to find every clue. The market gives us all the information we need to know. It's our job to learn how to read it, organize that data into a format that allows us to make quick, sound judgments on strategy. Patterns repeat in all time frames in all markets. So I like to work with just a few patterns. I used to be just a treasury trader and an equity market trader, but I found now that I'm not in those trading pits anymore, I don't have to just trade those. The great thing about screen trading is that you have access to any market on earth. So what Macrograph allows me to do is to look at 25, 50. I can scan 50 markets in less than 5 minutes and have an idea, maybe pick 10 of those patterns that I really like. So for me, it's a search of patterns that make sense to me rather than try and trade a market that doesn't make sense. I can't just be an S&P trader. Some days I just don't have a clue how to trade the thing. But I might in gold, or I might in crude, natural gas, cotton, cocoa. It doesn't matter. So the wonderful thing for me and Macrograph is that I'm allowed to scan many markets and find patterns that really make sense. And what we'll do is we're going to learn to search for patterns and recognize patterns that give us a good risk-reward ratio. And it doesn't matter what time frame. If you're a day trader, we'll look at daily profiles. If you only trade once, twice a week, or we're going to look at weekly and monthly profiles, or even longer. We can look at quarterly profiles, or even yearly profiles. So right here, what you're looking at is a yearly profiles for the S&P, and you can see how often the market develops these normal bell curves. Bell curves occur about 85% of the time, and when we get a normal bell curve, we're going to be able to learn we'll be able to define fair value, discover momentum or determine momentum, risk define. So if this structure occurs 85% of the time, why not concentrate on that? I mean, just look back here in 2008. We got a really normal bell curve, and for the first time in years, we start to see some selling below the fair price, telling us that sellers are in control. Now, I would have never have guessed that it would go down as hard as it did in 2008, but it doesn't matter. If all you did was trade off of high volume prices, you would have had a pretty darn good trade there. And even back in 2011, buying off the high volume prices in 2010, and even last year, this in 2012 off 2011. My point is, this is a very versatile tool, a very visual tool that gives you all the answers that any pro trader needs answered. And I'm going to teach you how to do that in the class. It'll take about 6 sessions plus 1 private session for each student. That'll give you about an hour of my time. I'll give you some of the services that I provide for free for a couple of months. Will really get you rolling and help you develop your strategy. So I really hope to see you in class. If you have any questions, please contact me at johnseguin@macrograph.com, or you can contact Jason Eade at Power Trade International. So I do hope to see you in the class. Thanks for coming.